Good afternoon, everyone. Jason here. Today is September 8th, and this is your aftermarket update. All right, I'm going to spend just a couple of minutes here with you in today's video. I'm going to talk to you a little bit about this particular trade. By the way, it was a really nice day here at the Oil Trading Group. In fact, it was one of our better days in a series of really nice days here recently. But we're going to spend just a couple of minutes talking about the mechanics of the entry that I got into here today. We'll talk about why we had the confidence that it was going to break down into our targets. Then we're going to spend just a couple of minutes talking about the week and what a challenging week it was in terms of getting any movement out of the market, but that how we talk about cutting your losers short and letting your winners run, how that theme really played itself out in a spectacular way here today. So we're going to spend some time talking about that, and then I'm going to let you see this trade that we took today, which was 170 ticks on a single trade using two lots here today. So first thing we'll do is we'll talk a little bit about the mechanics of this entry. So if you look at this red line right here, this brownish red line, I guess, that is the sweet spot of our retracement area. So if you are a regular room member, you know we have a favorite setup revolving around a retracement area. Also, if you did the extended trial for $47, this setup is detailed out for you in that trade, or sorry, in that extended trial setup. This is the trade that we use there. And so again, it was 170 ticks on two lots. That's $1,700 on the CL. That's a $47 extended trial. It's worth picking that up if you haven't done so already. But anyway, I digress. This red line represents that entry point. And so what we would talked about in the room today is as we were approaching the pit open, this blue line represents pit open here. And as we were approaching the pit open today, we already slammed into that level. And by the time we got together, which was on this red bar to the downside, the market had already sold off into this 84, 85 area. So one of the things that I had talked to the group about and said to them is we may have already missed our opportunity on the day, but I'm going to go ahead and put my entry in short, looking at that 49.11 area short. Fortunately, the market comes up, and it actually, you can't see this on this 3-minute bar, but it rotates there for a couple of minutes. It pings it, comes back down, pings it again, comes back down. And so we just spent a lot of time in between that level and settlement. So I will turn on the secondary levels here for you so that you can see settlement is right here. And so we spent some time here pinging around settlement. So again, we kind of had this idea that it might stop at 09, which was settlement, before it rallies up into that area. And so that was another thing that we talked about, is that it was a potential to miss us because of that settlement area. But we held on for that 11 entry, and thankfully we got it. And so once we were in that trade, we began to notice that something that was occurring that was really has happened over the last 3 days. We had a really nice rally on Tuesday, right? So just remember, this is a short week this week, and we only traded for 4 days. We had this really nice rally on Tuesday. We actually caught the majority of that rally for 132 ticks on Monday. Then Tuesday, we began to just kind of rotate around in this ever increasing rotational area. So if you look here at 84, where the market came down originally into, we came right down to 85, 84. That is where the market stopped here before it rallied back up into our entry location. Also, if you spread this out just a little bit, you'll see that the open price here was 09. That was the ETH session open. Also happened to be settlement. And after the open, our initial balance high area was 13. So again, you had just a couple of ideas giving you an opportunity to feel comfortable that this sweet spot retracement short was going to be the right idea. So now as I turn on the market maker levels here, we're going to turn off the revisions for a moment, and we're going to turn on these structure levels. And so one of the things that we talk about in here with these market maker levels is that they've got to get to the next step, right? And so being able to pick your way through this and determine how it's going to get to the next step is one of the things that we teach you in here consistently, but one of our favorite retracement areas here. So we were looking for, actually what we talked about in the day trading chat room is that the market should, if all things play out, we should get somewhere between 57 down here to 35. And if you turn on these levels, we would be looking for 44 to 57. So our initial targeting area today was in that zone. But one of the things that we always say, one of the things that we always talk about in here as we move and start talking about targets is if the speed of the tape is more aggressive. If things are picking up, then we are going to be moving the target down to that next target, and then again down to the next one, etc., until we get, usually either we hit that big extended target or we get stopped out. And so today we were looking to extend this target out to 48.41. Then we were talking about bringing the target down here to 48, really 48.11, which was our bigger picture target. And really at the end, we said, look, if it could go, if all heck starts breaking loose, it could come all the way down to this 47.84 level. That would be a real opportunity if the market were going to get aggressive. Then we did this little drill. So if you were to take a look here, okay, and this is Wednesday, Thursday, Friday, and you can see that we were in this consolidation price action type pattern, right? So higher highs, higher low, lower low, higher, okay, higher high, lower low, lower high, higher low, lower high, higher low, all the way through here. And we said that if the market were to break, then we would be expecting a move all the way down here to 47.84. That was going to be a possibility. Now, we measured this. That's basically a measured move here. We took this area where the high peak meets the trend line here, and then we just simply extended it out to here. Now, if you wanted to, right, you could have done it from this low up to this high, and that would have added a couple of more ticks to it. But we just did it this way. We said that extended move there could get you all the way down to 47.83. In fact, we talked about 83 being a potential targeting location in the room for a final spot. Now, we ultimately get trail stopped out on the way back up. I think we get trail stopped out at 26 it was 85 ticks on the move here today. So 85 ticks times 2 lots, 170 ticks. And so we were able to, as the market again began to get through and move, eventually it comes down, as you can see, all the way down into that market structure extension 2. In fact, it goes even deeper. So what we did is basically buy the high or sell the high here of the RTH session. We had a really nice, very good short trade. Now, that trade lasted nearly 2 hours today. So when you see this video, I'm going to cut it down into pieces. But that trade lasted about 2 hours today. Here's what I want to show you this week, though. If you were in with us on Wednesday or Thursday, all you saw was a lot of chopping around, disjointed moves, trying to hold on for targets. In fact, we had back-to-back losing days on, let's see, I'm going to go here. We'll go to the 5th because that was the first day back. We'll come up here to overview and calendar. We'll come here to September. And so you can see what we did. We had back-to-back losing days. We had 55 ticks and 19 ticks on these trades here on Wednesday and Thursday, and we bookended the week with these 2 massive trades. Why is that important, you ask? Well, it's important for this reason. One of the things that we talk about in here at great length and in great detail is we talk about the fact that you've got to cut your losers short and let your winners run. That's the thing that we insistently and consistently talk about in here. So we say, well, sometimes you may not even you may not be able to hold on for the really big targets like we did today. We had a 10-tick stop, a 10-tick initial stop, and a 85-tick trail stop out. Right? We had a 10-tick stop and an 85-tick target. That is basically 8.5 to 1. So with an 8.5 to 1 risk-reward ratio, you can be wrong a lot and still be right. So that's one of the things that we talk about. But if you can't do that consistently, then we do at least ask that you try to go for 2 to 1 risk reward. It's always, as we say, your money, your account. But that's one of the things that we try to get you to do is to hang on for these bigger targets. And again, today we showed you how we were able to do that. So if you take a look at your winning days versus your losing days, your total winning days during this week were 240, and your total wins were 302 ticks versus a loss of 24 ticks. Again, you can see just how that philosophy played itself out in here today. Even on the days that we were losing, we were holding our winning trades an average of 31 minutes and our losing trades for 8 minutes. So that's better than just about 4 times as long we were holding on to the winners as the losers. And, of course, we had no losers on the 2 days that we had the big winners. If you take all this together, you can see that we only won 50% of our trades this week. and our average winning trade was $450 versus the average losing trade at 205, and so that's a little bit better than a 2-to-1 risk reward ratio. And of course, our largest trade was 170 ticks, and our largest loss was 26 ticks. So one of the things that we consistently talk about in here, and I'll say it again, is we really try to encourage you to cut those losers short and let those winners run. How do you do that? That's an easy thing to say. It's hard to do. The way that you do it is the way that we show you how to do it in here. We have an idea of where our entry spots are, and once we get in, we have an idea of where the target is going to be. If the trade starts working against us, we throw it back as quick as we can. If the trade begins to work in our favor and the ideas are still lining up to hold on for those bigger targets, then we do everything in our power to make sure that we hold on for as long as we can. Now, having said that, on Wednesday and Thursday of this week, we had opportunities to get better than break even, and we could have avoided 2 small losing days. However, if we would have done that, then we would have missed today's big opportunity, and here's what I mean. If I had gotten into a habit because the market was telling me it was going to be choppy and bouncy and we weren't going to our targets, and this would have been day 3, and trust me when I tell you it was a 2-hour trade, there was some time in there where I felt like we may not get it done today, then what happens is you take off at smaller targets. Well, if I would have taken a smaller target yesterday and a smaller target the day before that, I would have been okay on those 2 days. But then that would have translated into me taking a smaller target today, and I would not have had the opportunity to catch the big winner that I did on Tuesday and the big winner that I did here today. Again, we have a philosophy. We're consistently applying that philosophy in front of you every single day, and the opportunities will present themselves. They might not present themselves every day, but when they do present themselves, they are really good opportunities, and we take advantage of a vast majority of those opportunities. That move today bottomed out at 47. The low today is 47.27, and we got in at 49.11 minus 47.27. There was still an opportunity for an additional almost 100 ticks, but that's okay. We took a big chunk of those ticks here today, and we would not have had the opportunity to do that had we been getting out at 10 ticks or 11 ticks, because the previous 2 days told us that it was somewhat choppy. So again, having said all of that, I'm going to let you watch this trade of the day. I've broken it down, and I've taken what was about a 2-hour long trade, and I've broken it down, sped it up, and given it to you in its condensed version, which is about 2 to 2.5 minutes. So without further ado, here is that OTG trade of the day. There's 7, 8, 9, 10. I am in at 11. My stop here is 22. The target is somewhere between 57 and 44. right, so you can see that the market comes back up. Trail stops us out at 26. I don't know, it was probably about 10 minutes later, the market continues the sell-off to the downside, but that is okay, right? 85 ticks times 2 lots is 170 ticks in a one trade and done. That's a great way to end the week and go into the weekend. Up a lot of ticks and feeling really good about the trading that's been going on. So, again, our main philosophy, our core philosophy in here, cut your losers short, let your winners run, was really on fine display here this week as we had a number of losing trades or break-even trades on this choppy market on Wednesday and Thursday, but we were stubbornly hanging on to our targets on Monday and Friday, and we ended up having a excellent week again on 2 lots traded. So, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.